Hello everybody, this is Lara with your first video of the new year 2022 for gold for the trading week ending Friday 7th of January. I am still expecting an upward swing to continue and it may end at or below 1875.09. It still looks like a huge Elliott Wave triangle or a classic descending triangle is completing, not quite done yet. Time to step back and update monthly charts both for Elliott Wave and for classic technical analysis. This is the bearish wave count. It sees a grand supercycle degree fourth wave unfolding as an expanded flat. Expanded flat subdivide 3, 3, 5 and this one is labelled supercycle A, B, C. Expanded flats are pretty common structures. Here's an example on a smaller time frame, or a smaller example. A, B, C. B moves beyond the start of A, and then C, this one moves a lot further, but usually moves reasonably beyond the end of A. They're a sideways movement in an ever-increasing range. A much bigger example is expected to be unfolding for this huge fourth wave. Both supercycle A and supercycle B subdivide quite well as double zigzags. Supercycle A looks like a more normal double zigzag. Cycle W and cycle Y are closer to even in length. Supercycle B looks like a bit of a different looking double zigzag. Cycle wave W and cycle wave Y are not even in length. Cycle Y is much more extended. If supercycle B is over there, then supercycle C would be expected to move at least slightly below the end of supercycle A at 1046 in December 2015 to avoid a truncation and a very rare running flat. Supercycle C may only subdivide as a 5-wave motive structure. If I have my degree of labelling for cycle wave 1 complete, then supercycle C cannot be an ending diagonal, it may only be an impulse, because within a diagonal all the subwaves must be zigzags and this downward movement will not subdivide as a zigzag, but it will subdivide as a 5. Within an impulse, waves 1 and 5 must subdivide as 5-wave motive structures. Cycle wave 1 subdivides as a 5-wave motive structure, suggesting supercycle C, if I've got my degree of labelling correct, may be a simple impulse. And so it will have to meet all of those core Elliott Wave rules for an impulse. 1 is a 5, 2 may not move beyond the start of 1, 3 has to move beyond the end of the 1 and it has to move far enough below the end of 1 to then allow 4 to unfold and remain below 1 price territory, and then 5 usually moves beyond the end of 3. The target calculated at 657 is for supercycle C to reach 1.618 the length of supercycle A. That's a common Fibonacci ratio for a C wave within an expanded flat to exhibit. Let's take a look now at the weekly chart. We're going to look at this high here of supercycle B, this point up here. Now we're looking at supercycle 1. It's a leading expanding diagonal. A diagonal is a motive structure, again suggesting supercycle C is going to be an impulse if this degree of labelling is correct. Cycle wave 2 looks incomplete. It may be unfolding as a zigzag. A, B, C, where B is a regular contracting triangle. Within the triangle, C may not move beyond the end of A and E may not move beyond the end of C. D, well, it could be a contracting or a barrier triangle. For a contracting triangle, D may not move beyond the end of B. For a barrier triangle, B and D should be about the same level so that the BD trend line looks essentially flat. Primary wave B looks like an incomplete triangle. I don't want to label it over at this week's high. That just looks like too brief an E wave. I expect it's going to take at least another 2 or 3 weeks, maybe a little bit longer. When primary B is complete, then an upward breakout would be expected from this triangle, and I'll calculate a target for primary C, probably for it to reach equality in length with A, and cycle wave 2 may not move beyond the start of 1 above 2070.78. I can't calculate a target for C yet because I still don't know where B ends. Let's take a look at this triangle. We're going to look from this low back down here, I think. Yeah, this low back down here. Here's the end of B, and C, D still unfolding, and then E still to complete. B subdivides nicely as a double zigzag. That's important because it tells us that because only one triangle subwave may be a multiple, it tells us that intermediate D may not subdivide as a double zigzag. When I first opened my charts for gold, from this low to this high, I tried to see if this could be a 5-wave structure and label minor A over here, but it just doesn't fit. You can't label it 1, 2, 3, 4, 5 for a diagonal because 3 would be the shortest. And so minor A is likely over back down here, and minor B may be unfolding as an expanded flat. Expanded flats in B-wave positions are actually really common. That seems to be the most common wave position for an expanded flat to unfold, and the next most common would be a 4th wave. Minor wave B is an expanded flat, so it's subdividing 3, 3, 5, labelled minute A, B, C. Minute C needs to complete as a 5-wave motive structure, 1, 2, 3, 4, 5, and it's likely to move at least slightly below the end of A to avoid a truncation and a very rare running flat. It'll probably come down, or it might come down, to test the AC trend line quickly back at the weekly chart level. Draw this from A to C, it's tested here, we may be about to get another test. It's pretty common for Elliott wave triangles to have multiple tests of their trend lines within a triangle subwave, and so this would be absolutely normal behaviour. When minor wave B may be a complete structure, then minor wave C would be expected to move beyond the end of A to avoid a truncation. When minor B may be complete, I can calculate again a short-term target for you for minor C to complete the zigzag of intermediate D. Intermediate D may not move beyond the end of B for a regular contracting triangle above 1875.09, but for a barrier triangle, D may end about the same level as B, so that the BD trend line looks essentially flat to the eye. That is the only Elliott wave rule which involves a small area of subjectivity. It means that this invalidation point is not absolute. When D is over, then E must subdivide lower as a zigzag and may not move beyond the end of C. This invalidation point is absolute. E may not move at all beyond the end of 1759.35. At the monthly chart level, this is the bullish wave count. Within this double zigzag, I'm simply moving it all up 1 degree and considering what if grand supercycle wave 4 was over here in just 4.25 years. We should be expecting grand supercycle waves to last much, much longer than that. They should last generations. And so just 4.25 years really does seem to be pushing that. The duration for how long the different degrees of labelling should last really does need to be approached with quite a great degree of flexibility, but this just seems to be too much. And that's one reason why the bullish wave count, I am judging it to have a lower probability in Elliott wave terms than the bearish wave count. But let's consider this, it is entirely a valid alternate. If grand supercycle 4 is over there, then this is where grand supercycle 5 begins. It may only subdivide as a 5-wave motive structure, and within it, supercycle 1 would be incomplete, subdividing as an impulse, with cycle 1, 2, 3, 4, 5 to complete. Cycle 1 has to be seen over here. You can't see it over here because that would be a 3-wave structure and it's obviously not part of a diagonal. So if it's over here, then cycle 2 fits as a double flat. W, the first flat in the double, is an expanded flat. A, B, C, the double is joined by a brief shallow zigzag, a brief, not shallow, zigzag in the opposite direction labelled X, and then primary wave Y, also an expanded flat, A, B, C. But there's a problem within this. I think it's somewhere in here. I think it's in here. There's a little triangle on the daily chart level, which this wave count has to absolutely ignore as a triangle. I've given you a link back to that chart that shows you where that triangle is in prior analysis at the top of every analysis if you're interested in looking at that little detail. That also reduces the probability of this wave count. This certainly does look like a third wave though, and it has a lot of strength as a third wave. If cycle 3 is over here, then cycle 4 is likely continuing lower as a zigzag, and that would give alternation with the double flat of cycle 2. Another problem for this wave count though is double flats, in my experience and research, have shown to not be particularly common structures. They're actually quite rare. Again, that reduces this wave count in Elliott wave terms. Cycle 4 may not move into cycle 1 price territory below 1303.51. The rule states the fourth wave may not overlap first wave price territory. It can overlap second wave price territory if the second wave includes price extremes beyond the start of the first, as this one does as a double flat. And that's okay, the rule would be met. Let's take a look at the weekly chart level now. We're this high here, cycle 3 is this point up here. Here's cycle 4 as a zigzag, A, B, C, with A leading expanding diagonal, B a regular contracting triangle, incomplete, and then C a downward breakout following the triangle. So the Elliott wave counts, the bearish count perversely expects an upward breakout from the triangle, the bullish wave the bullish wave count perversely expects a downward breakout from the triangle. So the Elliott wave counts are considering both directions of breakout, and from a classic analysis point of view, this may be a descending triangle and you need to consider both possible directions. So the Elliott wave analysis is giving structure to that classic analysis. For this wave count, the triangle will be nearly complete. Let's take a look from this low down here, which is this point here. Here's the end of B of the triangle, here's C a double zigzag, D a single zigzag, and E may only subdivide as a single zigzag because the double zigzag position is already taken with C, and only one triangle subwave may subdivide as a more complicated multiple. For the short term, both Elliott wave counts see the same structure unfolding in the same direction. A, expanded flat for B, minute C to move below A to avoid a truncation, probably to find support at the lower edge of this trend line, another test, and then an upward breakout from this little consolidation for C. When I know where B has ended, I will calculate a target for you for C. I can't do that if I don't know where it begins. Intermediate E for this wave count would be very likely to fall short of the AC trend line, and it may not move beyond the end of C above 1875.09. That invalidation point is absolute. The rule is very, very strict. At the weekly chart level now, considering the possibility that cycle 4 for the bullish wave count was over here as a triple zigzag, if cycle 5 has begun, there's now a series of 1, 2, 3 overlapping first and second waves. We should be seeing a wind-up of upward energy being released, we should be seeing a release of energy to the upside. After a winding up of potential energy in this consolidation, we're not seeing that. This wave count gets less and less likely every week. It's an unlikely alternate, but I still want to consider it, at least keep charting it for you. Okay, classic analysis. The month for December 2021 is over, and it's a green candlestick, but essentially price is consolidating. Even at the monthly chart level, this is now pretty obvious. Resistance about 1910, support about 1675. We need to see a breakout of this consolidation before we can have any confidence of what direction gold is going to go in next. On balance volume also consolidating. ADX declining, there's no clear trend. ATR declining as price moves sideways is really normal for a consolidation. RSI in neutral territory, as is stochastics. This chart is absolutely overall neutral. We need to see a break above resistance or below support for confidence in the next direction for gold, and it's been consolidating for months. At the weekly chart level, it looks like there might be a big descending triangle. The upper trend line of the triangle drawn across these three highs has a lower slope. The lower edge of the triangle is flat. Analysis perspective, downward breakouts are more common than upward breakouts from descending triangles by 64%. So more common, but it's not a huge margin. Upward breakouts are usually more short-lived but profitable. Reliable. It's both profitable and reliable. We need to see a break above the line of resistance or below the line of support. That means a close above resistance or a close below support. An upward breakout requires support from volume, not necessarily so for a downward breakout because price can fall of its own weight. That's a shorthand way of saying price can fall due to a lack of activity from buyers just as easily and quickly as it can due to activity from sellers. Resistance here about 1915, support really strong about 1675. Price has essentially been moving sideways for many weeks. ADX is currently declining, the DX lines have been whipsawing. ATR is declining, totally normal, common behaviour during a consolidation. This is a huge, long-lived consolidation. When price is consolidating, it swings from support to resistance and back again, and when it does that, it tends to not do it in a straight line. It tends to be really choppy and overlapping, much more so than when it's trending. So consolidations are extremely difficult to analyse in terms of Elliott Wave, and usually more difficult to trade except for those who are very experienced. We can also see overshoots of resistance or support before price can turn back into the consolidation and continue its consolidating behaviour, and that's one of the reasons why they are difficult to trade, generally include higher losses than trending markets, so best left for very experienced traders only. This week, a downward week, well, a slightly higher high but a strong close lower and push from volume suggests possibly a little bit more downward movement next week. That's what the Elliott Wave count expects for the short term as well. On balance, volume has a really weak range. A breakout here would be such a weak signal, but let's see if this range can continue to develop. RSI neutral, stochastics neutral, ADX declining, DX lines whipsawing and ATR declining, typical of a consolidation. Looking at a little bit more detail within the consolidation now, here we've got resistance about 1835, support 1765, 7050, and below that 1720. But that strong support on the weekly chart, 1675, is the most important. I've slightly adjusted these trend lines on balance volume to have a slightly better fit. Still constrained and no signal this week. Volume pushing price lower here for this session, but for the last session of the week, a bit of a bullish long lower wick and still reasonably good volume, although it's a bit weaker. We might see a tiny little bounce on Monday when markets open. ADX declining, and at the daily chart also the DX lines whipsawing, RSI and stochastics both neutral, ATR declining as price moves sideways. This little increase here coming as price starts to move a little bit low, a little bit of strength to the downside there. We might see a little, maybe after a tiny bounce early next week, we may see a little bit of a push back to support within this larger consolidation. That's all for me this week for gold, and I hope everyone had a fabulous week.